Good morning, everyone. Welcome to Admiral Markets. This is the live strategy webinar of today, the 29th of July. Got a few days left in this month, so we're going to take a look at the last few days of the Forex market. Before we do that, though, please be aware that this webinar is intended for a global audience. It may not be suitable for everyone. To find out if it is and other conditions and details, visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Alrighty, so let me first check if you can hear me properly. Caitlin seems to say that there's some problems with the audio. Does anyone hear me? It's okay? It says normal as usual. All right, good. So maybe Caitlin, now it's okay. Okay, great. Also, be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice, it is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. All right, let's take a look at the calendar quickly, and then we'll dive into a strategy for today. Let's see, the calendar, yesterday we had a big pound news that certainly moved the market. Today we have Fed interest rate and the FOMC statement, I believe, today at, it should be about 2 p.m. Eastern time. So that's going to take a while. It's probably about less than 12 hours from now. All right. Keep that in mind. There are also some other things going on. Let's see, in the European session, some green and medium impact news events. All right. So let's take a look at the strategy. We'll take a look at the time system that we looked at the last week and go through it step by step. And basically, time system is the method of counting candles and making decisions depending on how many candles the count is in. It basically uses momentum and correction. So it takes that as its primary focus and tries to trade the momentum either during the momentum or after the correction. And while momentum, of course, in correction is there's always constant momentum or correction going on. It's like a heartbeat of the market. And it's either in a momentum or a correction. Typically, corrections last a bit longer than momentum. Momentum is fast. Correction takes long. So that's the reason. And what we were looking for with momentum is some clear piece of the chart that is one directional with good strong candles in that direction with closes near the high or low, near the low for a downtrend or bearish momentum, near the high for a bullish momentum. We want reasonable sizable candles compared to the correction. If you look at, for instance, this part here, that was a good bearish momentum. This was a good bearish momentum. And if you look at those candles within the momentum, they're certainly bigger than, let's say, these candles right in here, or these candles that are going sideways. So relatively big candles for that time frame. Candle closes near the low or high, as I said, and most of the candles cutting the low. And eventually there's going to be a candle or two that doesn't cut the low. So let's say the border of when momentum stops is when, according to this system, 5 to 6 candles don't break the low. When 5 to 6 candles fail to post a low in a downtrend, obviously, or a high in an uptrend, right? It's always the opposite. Then the momentum there is finished. So in this case, for instance, right here, this is momentum, but we still had a candle pushing through the low here within 5 to 6 candles. This is the sixth candle. So that's still, this part still belongs to that entire downside right here. Of course, you can see that this part, definitely no doubt about it, because each candle was cutting the low, or almost each one, except here was a small double bottom, right? Right here with the two candle lows being equal to each other. Otherwise, each candle low was broken, and that's a very clear momentum. Then we had a bit of a pause, but the pause was short because within the sixth candle we got a continuation. So still one part. So does that is that clear first of all? Any questions on this? As soon as six candles fail to break the bottom, momentum is finished, correction starts, and then the correction will last until a breakout occurs. For instance, let's take a look at let's see here, momentum sideways. What's not maybe the best example, but this is the sideways zone. So as soon as price really breaks below the support, that's a breakout to the downside. All right. Now in this case, I would not trade the break to the upside here. All right, because we had momentum to the downside before that. It's possible if we had momentum here, I wouldn't say this is momentum, but let's say we do have it. Let's make a drawing here. Let's say we have momentum down and we get a consolidation like this. Then obviously the break to the downside is good because it follows along with the momentum prior to the consolidation. But if there is a momentum within that consolidation, still something like this, and then we get the consolidation box, then basically a breakout to both sides is possible. I'm not sure about what that question means, Jenny, but the momentum is stops if six candles fail to post a higher high or a lower low. So let's take a look. For instance, here we got a very clear directional push to the upside. And we have one candle, two candle, third, fourth, fifth, and then the sixth still pushing through to break this high, the original high of the highest candle. So the high of the highest candle. So as the highest candle is broken within the sixth candle, it's still a continuation. It's still part of the momentum. Let's see. Naved is saying that the sound is not working. Do you hear me properly? Okay, cool. Let me write back. Alrighty. So let me just give me a minute here to look at two questions. There are situations I see then momentum has stopped to the downside in 4 candles. It did not take 6 candles. True, it is the maximum number, but it doesn't have to be the 6th number. It's within 6. It doesn't have to be the 5th or 6th. So it's either after an immediate breakthrough or after 1 candle pause, 2 candle, doesn't matter. If it's whether it's the first, second, third, or fourth, it's all good. So if you have a momentum and it continues after only one candle is pausing, or two, or three, or four, or five, as long as this at the latest the sixth candle pushes through. It doesn't matter if it's the first, second, third, fourth, fifth, or sixth. Let's see. Yeah, exactly. This is upside momentum, and this is already downside momentum here. You see that? So it's a very flexible way and method because the trend is quite rigid, and you could still be trading with the trend and get into trouble because you're trading against the momentum. It could be an uptrend, but you could see this fly down like that all the way back to the channel, and where does it really bounce? If it does bounce, looking for longs can be, although it's with the trend, could be quite still not as good as it seems. With the advantage of this is that you're trading the pieces where the good pieces of the trend. If it's trending up, great, and if it's the momentum is up, it's great. You'll be trading it to the upside. But it's even possible to trade the momentum to the downside against the maybe overall trend situation. It's basically trading momentum and is very flexible in its ups and downs and the flow of how price moves. And you're catching, I would say, pretty quickly the turns, the ups and the twists, each twists basically as momentum shifts. Jenny, I'm not sure what you mean with how do we deal with such a scenario. Let's see. Then how many correction candles is a scenario fourth candle momentum or rest? Not sure what you mean, but if the fourth candle pushes through, one second. I just deleted my euro dollar chart. If the fourth candle pushes through, let's say it's momentum down, one, two, three correction candles, and the fourth one pushes through like this, then there are three correction candles. So we can have a maximum of five correction candles because the sixth candle must push through at the very latest. Yes, indeed. As far as I see, valid for overall time frames. One thing though you want to be careful of is trading the euro dollar and pound dollar on a 5-minute chart in the Asian session. I mean, maybe technically you could see momentum followed by correction and momentum, and probably would not go too far. And you would want to be careful with 5-minute charts, I would say, in the start of London session as well. And the gap time, anytime between when New York closes and Asian. I didn't do any testing on that. So that's something you want to definitely be careful with. If they're both, if they're if there's momentum on both sides, then it could be best just to wait for the break and take the one that breaks. And if in such a scenario, it doesn't matter which one breaks. Both are possible. Alrighty, so I think that we can move on. Which is the best momentum indicator? Well, a lot of people like MACD. I like the awesome oscillator. I think that eventually, if you look at the charts enough, you probably don't need an indicator because you can visually see the strength of the price action in relationship to how much time it has moved. I like the awesome oscillator personally myself. This does not necessarily only work for 4 hour. I think you can apply it to any time frame. All right, so let's take a look now, and the MACD is very popular with many, and I use the awesome oscillator. It's part of Bill Williams' indicator, and you'll find it right here. So the fractal is useful indeed, so let's add that. Fractal indicates, support and resistance, and is useful for finding breakout levels. And I think that's really the only tool that needs to be necessarily added. Could be also without it, but I think it is quite logical to add that. Otherwise, there's really nothing else needed. No tools or indicators are a necessity really for trading this. So it's from a charting point of view, it's probably as simple as you can get. The only thing that really makes a visual sense and ease is just the fractal indicator. All right. So let's take a look at some practical examples and not to get too bogged down by questions. Let's say your dollar here, we have a downside momentum. We have 4 candles clearly showing good momentum, good size candles, closes near the low, and all of them have actually a lower low, so there's no inside candle. So there's nothing wrong with this particular momentum. So in that case, a break of the fractal right here could be such an entry to the downside. Momentum, correction, momentum. Now, the continuation would have to be within the 6th candle for the entry, because otherwise it's not momentum anymore. If this bottom doesn't break within the 6th candle, then it's not a momentum continuation. So if we count 1, 2, 3, 4, this is the 5th candle. So this candle and the next, okay, but if it doesn't within those 2, then I would delete the pending order to the downside here. And it's not a valid sell signal anymore. The upside has momentum too. It has momentum right here. Also, even stronger bullish candles. First of all, there are definitely 3 out of 6 candles that are bullish. You got good sized candles, no inside candles, or one of them, but it's only one of the 5, no problem. And you have definitely higher highs, good closes near the high, and you have good sized candles. So that's a momentum. So looking for the fractal for an upside break, which still is here, in fact, but that could definitely change if 2 candles close to the right of this candle where I have the arrow. When that happens, then the fractal entry break would be here, above this high. But not at the moment because there's still no fractal at that point. So this is of course a 4-hour chart, so you're going to look at obviously larger stop losses, larger entries, and might not be something that is suitable for everyone, but we can dive into the 1-hour chart and do the same, approach. That's okay. This is just an example to make clear what we're looking at, because a week ago we looked at the first time as a strategy, not just as something that is added along with analysis, and perhaps not everything was clear. So I wanted to start from the very beginning. So from a 4-hour perspective, these 2 levels are the most important for the moment. That will change as soon as this becomes a fractal, and that will become the level. Now, one thing we have to keep an eye on, though, is that an entry to the upside is not valid as yet. And that has to do with the fact that this candle is the 11th candle since the highest high here, since this bullish candle. right here. And the rule I use for a minimum length of correction is 13 candles or 12 candles, and the 13th could be the breakout, which means that at this point in time, I need, because this is the 10th candle, I need this candle to close, I need 11th and the 12th candle to close, and then the 13th candle I would be allowed to take the upside break. Either of this level, where I have the blue circle, or this level, depends where the fractal is. All right, so at this moment I would not be looking for longs, but 3 times 12 hours from now, let's say, or anyhow, 2, 3, let's say 3 candles close from now, right? Then upside is okay. Downside is okay for the next 1.5 candles. So that's the Euro-dollar 4-hour chart. I see Caitlin is saying I see 2 inside candles. No, indeed. Caitlin, good observation. You see, there are always kind of like small details that are good to discuss. Inside candles of the opposite side don't count because we're basically analyzing if the momentum to one direction is strong enough. So for instance, this downside here, we're trying to analyze, is that a momentum or not? And the opposite side, with in this case it's bearish momentum, so the bullish candles are not, how do you say it, not incorporated, not analyzed, not taken into account. We're trying to assess the strength of the bearish candles. So when counting, if there are 3 bearish candles out of 6, out of those 3 momentum candles, I don't want to have 2 inside candles. Max 1, preferably 0 of those 3 momentum candles. The opposite, indeed, the bullish would not be, added to that, or not incorporated, or not analyzed. Yeah, the exit of this system is basically holding until the momentum is over, indeed. But I wouldn't mind looking into how a trail stop would react. The tricky thing, of course, is that the trail stop would have to be properly tested so that not only the results of perhaps losing trades is taken into account, but also winning trades, because it could affect both. And a trail stop obviously only makes sense if the net effect, the net impact is positive for both winning and losing trades. So I'll be curious about that. I didn't do that at the moment. I just ride the momentum until the momentum is over. All right, so let's take a look at the hourly chart. An inside candle, by the way, for those that are wondering what it is, an inside candle is when the candle here, for instance, is the high and low of that candle, right, is basically engulfed by the previous candle. So the candle with the green circle there, the high is lower than the previous candle, and the low is higher than the previous candle. So both the high and the low are within the range of the previous candle. You can see the big bullish candle before that, the big bullish candle with the high and low totally engulfing that smaller candle. So the green circled candle is an inside candle because of that. Let's take a look at an hourly here. For instance, this is an inside candle too, right there. All right. hourly candle, hourly chart. Well, we have basically downside momentum. We have it here. This part has clear momentum, good candles to the downside, and qualifies. Now, if we're looking for a specific part of 3 to 6 candles, we see that this, oh, sorry about that. This clearly has 3 candles in a row, so that's already a part that qualifies. Or for instance, even this is okay. There's one inside candle, but that's tolerable if the other 2 candles are looking decent, and they are because they're strong, good sized, and they have good closes near the low. So even this part counts. And considering the fact that, of course, this entire part is momentum, we can qualify that as momentum. So it's clear this is momentum. 4-hour chart says the same. So from an hourly perspective, we can see that this correction has lasted already some 20 hours or so. And what is actually on a 4-hour chart is still a momentum breakout potential. On an hourly chart, this is actually momentum correction and potential momentum again, because it's of course on a lower time frame. So the break below this fractal would actually be the signal, and the trade is about to get entered. Let me take a look exactly what the low is. 110.41, which would require 110.31 entry, and the low here is at 31. So yeah, that is a 1-hour potential entry there. Stop loss would go 10 pips above the opposite fractal plus spread, which means something like that at 97. So for an hourly chart, maybe quite a spacious one. Well, no, maybe not. Maybe about average, I would say. And then if the lower, of course, one goes, maybe a 50-minute chart would be again about half of that, or a third of that, no, 2/3 of that. Now the upside, if it had some momentum too. I mean, if you start counting candles, but I would say particularly this part. I mean, this part I wouldn't count because you can see that there are 2 inside candles. This is a momentum candle perhaps, but it's still inside the doji. And then we have these 2 candles, 3 bullish candles that are all within 1 doji. So actually there are 3 inside candles. So this is not momentum. Could it be qualified like that? We could take this candle as the base, and say, okay, of those 6 candles, 1, 2, 3, 4, hang on, 1, 2, 3, 4, 5, 6 candles. Yes, there are 2 momentum candles and a third that could barely qualify right in here, but that's just so small that it's doubtful. So it's one of those gray area cases, I would say, this part right here, whether that's momentum or not. If yes, I mean, it could have been interpreted like that, then a break above this fractal was needed. It didn't happen anyhow. And in this case, that momentum is actually out of the window, because once the bottom breaks, once the bottom of the momentum breaks, that momentum is not valid anymore. So even if this could have been considered momentum, the break of the fractal didn't happen, and now we broke this bottom, which means that momentum is anyhow irrelevant. It's not valid anymore. So let's take a look at the 15-minute chart. It's actually a 15-minute entry too. And it's a confluence here, isn't it? Because on the hourly, it's basically a momentum correction momentum. On a 50-minute chart, it's different. 50-minute chart, we're looking at this as momentum. And this is actually a momentum pullback, momentum continuation trade. Why do I say pullback? Because there are only 2 candles here. So this is clear momentum. I don't think we have to discuss it, but we clearly have here easily, easily 3 out of 6 candles that are bearish. Here another potential 3 out of 6. So easily momentum, isn't it? That's no doubt about it. Then we have the pullback, so we get the fractal, and we get the break of this fractal after 2 corrective candles on the 3rd candle. So that is a clear momentum continuation on this 15-minute chart. Five-minute chart. 5-minute chart is different. 5-minute chart, this is already a correction, and it broke on the 10th candle. So from this point of view, from a 5-minute point of view, it's not an entry. It doesn't qualify. It doesn't mean that the breakout has to be a bad one. It's just that the system, the strategy rules, don't have an entry on the 5-minute, but it does on the 15 and it does on the hourly. So in this case, you can see that there is quite, I would say, a decent confluence to the downside at this moment. Daily chart, well, it's of course a very high time frame. Daily chart is a bit different. We actually have momentum candles to the upside, but it would require, before we get a break on the daily chart, it has to push through all the way below 108. So, that's going to take a while. That's going to take some time before that happens. It's just takes a lot of time before setups occur on this time frame, obviously, no matter what system. So, but anyhow, that would be 108 will be the crucial level for a continuation of the downside break. But it would have to happen, yeah, it has to happen about 6-7 days from now. Otherwise, it would not count. And it cannot break above this 112 top. Otherwise, the momentum to the downside is invalidated. So the opposite side is too. This is a momentum. So as soon as today's candle closes, this high becomes a breakout to the upside potential. As long as this bottom doesn't get broken, because otherwise the momentum bottom is invalidated. That would be after today. So that's how you can look at the daily. You can use this at any time frame, but the daily is going to be slow, of course. So let me take a look at maybe the pound dollar. Let's see. Keaton, unfortunately, sorry about that. You're talking about a big bullish candle engulfs a doji and a momentum candle. I think you were talking about the hourly. These candles right in here. The 4-hour. Okay. Got it. Let me take a look. How would I fib the daily? I'm not sure about that actually, because the daily is so choppy here. I think the best fib probably is still this weekly fib, and the 38.2 fib at 117 is a good resistance. The daily, I think ultimately we're still in this range. I mean, this is just a range, really. And this is the previous swing still. But yeah, this double bottom, I wouldn't say that. I wouldn't look at these fibs anymore. They could still be pausing spots though. Here we had, it's not even an 88.6 fib, it's more of a double top. So the thing is that as long as we stay in these levels, it's more of a range. So to use any fibs within this, I don't know. You would have to really go to maybe a lower time frames. But on the daily chart, I don't like fibbing in sideways pieces like this. That's why. 4-hour chart, 4-hour chart we can use fibs, for uh, continuations or targets like this. You can see that the target, if we do break lower, it could be the minus 61.8 target, for instance, right? From a 4-hour perspective, I would probably use this fib. like that. And there's some confluence here at 109.50ish, 70ish. Yeah, these two are inside. You're right. Good point. There are two inside candles. There are three inside candles, in fact. No, this one just not. So you're totally right on this part here. These candles, right? These two. Yeah, those are two inside candles. Totally correct. But still, this is momentum because this is one momentum candle, this is two momentum candle, and this is the third, and this is the fourth. So it's still okay. It still qualifies, even despite these two. If you're wondering about the first one, it is indeed inside this one, where I have the red box. All right, but that's okay because we're looking at a piece of six candles. So if we look at these six candles, then we can count three or four in this case. Okay, let me take a look at the pound dollar before, and maybe this is went too slow for some of you, but I wanted to make sure that various kind of like smaller details, which actually are quite important for the specific way of trading if using this system. I mean, you can obviously use the idea for trade management exits just as a discretionary thing, but if someone is more interested in the system, then that's the details I use, for this method. So anyhow, pound dollar. All right, pound has let's see, 1, 2, 3, 4, 5. It has. Well, I was looking at this piece. Actually, this is seven candles. Technically, it wasn't tight enough. I'm looking at 3 out of 6. So perhaps not a entry that actually should qualify, but yeah, it was close. In any case, this is 3 out of 7. Technically, it should be 3 out of 6. So this is maybe not officially counting as momentum, but if it were momentum, then the exit would be above this. The entry would be above this fractal. There's also momentum here to the downside, clearly. So the next fractal break would be the entry if there are 12 candles, and they are. This is candle number 18. So to the downside, let me take away these levels. The important fractal is here at 155.25. As soon as it pushes through that, then this momentum is continuing. And the reason is because, first of all, we have clear momentum here. We have candle 1, 2, 3, and even a 4 and a 5. So that's clear momentum. This top didn't get broken. This has lasted more than 12 candles. So as soon as this pushes through the bottom, then that is the system entry. Daily chart. Probably wouldn't qualify. It's a close one. There are two good candles here. There is a third that is bullish and a fourth that is bullish. Um, but these are doubtful candles, so it's a gray area. Downside momentum is clear, however, here. So a break of this fractal would indicate from a daily perspective the downside. Don't forget that this is the 4-hour entry, this is the daily entry. As long as there are 12 corrective candles, and we do have that. So we got short potentials below this support. Upside, well, it depends. If you see this as a momentum, there would be an upside potential above this top. But only, let's see, today's Wednesday, only next week, not this week. 4-hour chart. We did already that actually. 1-hour chart. Nice channel. Couldn't resist drawing that. But in any case, we had momentum here, 3 candles here, 1, 2, 3. This small part right in here, break of that, and the exit was somewhere in here. Then we had this momentum actually right in here. That got broken here. No, actually already here, sorry. And the exit happened somewhere in here, actually. You can see, let me zoom in. This is candle 16 pushing through this fractal, and the exit occurs when we have 6 candles not breaking the high, which would be right in here. That would be the exit. That's the entry, that's the exit. All right, so do we have a new upside trade or downside trade on this hourly chart? And we have to analyze if we don't have down momentum at the moment. There's no down momentum. This is a pin bar reversal that doesn't count, and we don't have 3 candles with the downside after that. No downside momentum, so no downside entry. The upside, let's count. We have 1 candle here, a second candle here, and I think these are quite small. This is a good strong candle. It's an inside candle, but it's a strong candle, but it's the third within 8, not 6. So I don't think that this qualifies as momentum. So looking at the hourly, there's no up or downside at the moment. It's too choppy. So that's the pound dollar. Now, if I'm expecting a break, this system really doesn't have an opinion. Let me say it this way. It doesn't, it's not a, it's just looking at the system itself, it doesn't matter really. It doesn't look like, it doesn't incorporate whether it will or could, or it doesn't have an opinion. If I would look at my wave analysis, of course, which is a different topic, but if I do that now, then I can show you that quickly. Hang on. Yeah, this morning I still marked this as an A, B, and this for a C. Doesn't look like we're getting the C, and we could get a B that goes deeper. I would still think that we get support at the trend line, looking at this wave analysis at least. So where is the trend line? It could be anywhere here that we could still see a bounce, basically. We're still in the channel as well. So from a technical point of view, a bounce there could happen, and we could maybe fall slowly, or I don't know, we could fall maybe to that support and see a bounce there. So from my perspective, a bounce is, from a wave point of view, channel point of view, is the most interesting. A short right in here is not interesting because it's an uptrend channel and we're halfway to that uptrend channel. The 13th candle, let's see. I used this fractal, but yeah, I think that, as you can see, it just barely didn't qualify actually. But anyhow, I still have the same exit. I mean, as soon as 6 candles do not break this high, I'm out. So I doubt it will be a full loss. You never know, but chances are small. The break of the bouncing the channel here, what's coming in about 155, 60-ish, 50-ish, depending where it exactly hits on the time scale. Yes, indeed, 60. 15-minute chart. Well, a 50-minute chart, I wouldn't qualify this as momentum. And the reason is there are 3 bearish candles there, but one of them is a pin bar right here, which this reversal doesn't count. So, but we have three bearish candles here. That's momentum within the 50-minute chart. So there was an entry on the break of this fractal on the 50-minute chart. There was a break below this support. That trade is going as we speak. That already took place, that entry. And it's still going. The momentum is still going because the candles just posted a new low. So new low means there could be another 5 corrective candles, and then the 6th one needs to break. And I wouldn't use 10 pips here with the 50-minute chart. I would use 5. So the trade is up 7 pips. Stop loss would have to be above this fractal, about 26 pips. So that would be the 50-minute momentum, pullback momentum. So different time frames that show different potential. And the exit could be, as soon as the momentum ends, basically. As soon as 6 candles will break that bottom. Just speculating here, but it could easily, let's say, fall to that bottom, hit the bottom, make 5 to 6 candles not breaking that bottom, and anyone who's looking for a long might want to take a reversal trade on the 50-minute chart from instead of exiting, might want to enter as they're anticipating a bigger bounce at the support level within the 1-hour channel, using the exit of the 50-minute chart as a potential entry, in fact, instead, using it as an opposite role. This is not really the strategy I was explaining. This is a different strategy, but applied in a different way. This is a different strategy, just applying the method in a different way as a reversal. So that would be one way. If a bounce here happens, that could be a way to take a try in trading it. So we went through. I mean, it took a while for the euro and pound. Does anyone have a preference for one particular pair? The odd USD is getting the turn at the 50 fib, by the way. Talked about it on Monday. Look at the 50 is 61.8 fib, and it's hanging there for a while, right in between those levels, and now is making that turn. Maybe we can take a look at some entries that I had, for instance, on Urian. I had an entry, or that's already closed, so maybe it's easier to take a look at something that's going on now. Let's take a look at Pound New Zealand, perhaps there. All right, Pound New Zealand. Pound New Zealand, clear downside momentum, So this could have been an entry, but that was already exited somewhere in here. Then we have here, I would still qualify as momentum. We have 1, 2, 3, or here 1, 2, 3. It is a close one, considering the fact that this had a bit of a wick, but ultimately it's still bearish. So this is a bit of a doubtful one. But anyhow, I did take it personally. I took the break of this fractal, and the fractal break happened on the 17th candle. So I took this break, and it still posted a recent new low. So I'm still in the trade. This is only the second corrective candle. The pound odd, I took actually a trade here. So the entry was on a pullback. It wasn't really a breakout. So I got a bit of a better entry because of that. But the exit I did use according to the system, and that was here. And that was about 250 pips. Euro yen, I took an entry here and exited here. Smaller win. And let's see, I should have actually had 2 entries on that, but I only had 1. And it's because I ignored this one. All right, so technically, of course, the system is very clear, exit at this point. But in reality, what I do is discretionary sometimes, making a decision that do I still, even if 6 candles don't break it, do I still hold the trade, knowing that there is a consolidation coming, but I still sometimes hold it because I expect to follow through. The odds that's a discretionary decision. The odds of the trade still continuing after the correction, even though I know a correction is probably starting, I still think that after the correction, the chances of continuation are good and that therefore can hold. So that's what I did. So I held through this period, even though the rules of the momentum had been passed, and exited on the second correction. Let's see. I had a dollar Swissy. That's not doing all too well. It had momentum here. So I took this break, this fractal, and it's about break even at the moment. And this is candle number. We have 4 corrective candles. It's the 5th corrective candle. So it will have to break soon. This top has to break soon, or I'm out of that trade. These are just some practical examples that are happening right now. All right, pound yen, for instance. 1, 2, 3. So that's momentum. I therefore can take an entry above the fractal as long as it happens between candle 2 and 6 or after 13. At the moment, we have 4 corrective candles. This is number 5, so I can still leave the pending order here. The stop loss should actually be below here, but I have an entry order based on it's a combination of 2 systems, and I'm using the stop loss, the tighter stop loss in this case. So 2 systems, both systems give an entry here, ironically, but one system says stop loss here, the other says here, so I chose the tighter one. All right, so let me take a look at some questions. If you have some questions, let me know. It could be a good moment, perhaps now, to explain everything that is not clear, or if you have a pair that you want to take a look at, drop me a note. In the meantime, isn't it a pin on the first momentum candle on No, I don't consider this a pin because it's engulfing twin. So what I would consider a pin bar is something like this. It is a reversal candle. I do agree with you on that. So these are details that in when testing perhaps other optimizations could turn out to be better, but there could be many optimizations to look at, and that could be quite difficult to optimize. So I was just looking at pin bars. I was just excluding pin bars, but not engulfing twins from this list. All right, let's take a look at the cable. So the cable had momentum here, pullback, and momentum. So that's the continuation on the 50-minute chart right there. That's the momentum entry. And if you're thinking about the reversal long, that's a different kind of approach, and is using the exit basically as an entry because of the longer time frame. Using the exit as entry is is the reversal trade, and could be done in cases where, for instance, on a higher time frame, we're expecting support, we see an uptrend, and it's only a reversal on a smaller time frame, bringing price back actually to long-term support. So what would have to happen then basically is that this downside momentum shows five candles that don't 5 to 6 candles, right? That don't break this bottom. So if we have six corrective candles here, then this bottom has not been broken. That would mean an exit for this particular short, and where the exit is could be the entry for those that are looking for a long-term bounce. Or in other words, it's how some call it. It's a hook back, a bounce, hook back, continuation. So the take profit I would have in mind Well, ultimately, I think the take profit could be quite tight because we're looking at this as well. So even if there is a bounce here, I don't know how much steam there is left with the FMOC tonight. Let me take a look at the pivot points. Got an L4 here. Probably the H3. I wouldn't really aim for more. H3 is about 156.38. But we also have a top here at 156.25. Yeah, ultimately, I'm not sure how much steam we can get here because we do have resistance levels anywhere between 156.50 here. We could see some struggle, I would say. So I think it's more of a reversal bounce. It's a small bounce. I mean, it could go further, but due to the uncertainty today, wouldn't expect much. Yeah, definitely, Kate. You could do, for your own trading, various money management items indeed, like opening two trades, taking both of half the risk, and using different stop loss for both, depending on if you have this system that shows the same entry but two different stop losses, you could do that, or just choose one of the two, or split it in this way. You want to be careful with maybe over combining things, but there's nothing wrong with that. And a trail stop, using fractals in general is not bad for trail stops, especially on a 4-hour chart, daily chart. 1-hour chart, you're going to see some fractal break a bit perhaps too soon before the trade goes your way. So using 2 fractals back on the hourly could be a bit better. Yeah, definitely be careful with the FOMC. It's still far from now though. It's 11 hours, but or 10 hours. But within, I would say at the end of the London, the New York lunchtime, I don't think it makes sense to do anything or be careful with any decision after that because really New York lunchtime will be kicking in and then we have FOMC. So the pound could be under recovery, definitely. This level is important. Has to stay above that one at least. And it's ultimately going to have to break above this top. But I don't expect that this week. So it can stay, at this moment, if it stays within these two ranges, it's not really showing its true potential. We don't know. It could really, these two levels I would say are key. Within these two levels, it could just do a lot of ups and downs. Of course, if it does get closer to support, there's a chance of a bounce. As soon as it gets closer to resistance, there's a chance of a bounce again. For the moment, I would be careful of those two levels. Yeah, ultimately this one too. From a daily perspective, this one indeed. Momentum indicator, that's basically the awesome oscillator that I use, and others use MACD. Good, let's take a look at the few more pairs perhaps. MACD a bit slow. Difficult to say. I think it's a better question for Nene. I mean, other momentum indicators people use is stochastics, RSI. These are typical average moving indicators. Now, momentum indicators. If they're a bit slow, yeah, I don't use them, so I it's difficult for me to say with. I think it's a better question for Nene. He uses the MACD, but he uses the MACD, the new MACD. So maybe that's a bit better. Okay, let's see. Your odd here has momentum. This is momentum to the downside. It has three bearish candles in a row even. So it qualifies decent candle sizes. Eventually we did get the bounce to the upside because I was saying, somewhere around here, we will get a bounce back up, but be careful of this big candle. It could drive price a bit lower. So preferably we want to see a bullish candle or a doji before trading the bounce. And this, yeah, I was looking for bullish or doji. This was still slightly bearish. So the first bullish candle is only here. So this could be already the first warning that we're getting a bounce. If it does push through this bottom, not now, but the next candle or the candle after that, within 5 to 6 candles, it could be a bearish breakout, right, from a 4-hour perspective. For the moment, though, I'm looking from just using technical analysis. This has nothing to do with momentum. Sorry, this has nothing to do with the time system. This could be still a bouncing spot because of this big momentum here, and we bounced off probably a fib, 38.2 fib. Bounce with C, I'm in a long based on this momentum. And we had a break of fractal on candle number 17. And this is maybe a good case to look at because this could be considered momentum too, but it's not valid anymore because the bottom got broken, right? So that doesn't qualify. Here we had a break of this fractal. That doesn't qualify because the break happened on candle number 12. So this, sorry, let me finish this point. Actually, this momentum doesn't count. This momentum does count. That's momentum. The bottom is all the way down here. That bottom didn't break, so that still counts. So the first fractal break to the upside counts. This one is the first, but it's not within 12. Sorry, it's not the 13th candle, excuse me. Or it is? No, sorry. This candle here is the 12th. And it should be the 13th. So no, this break is too soon. That doesn't count. So this break does count. That's where I took it. Still in the trade. Exit happens on the 6th. So this is the 5th at the moment. If it doesn't break within the next two candle closes above this, I exit the trade probably for a small profit, depending on the next two candle closes. That's the pound Swissy. Pound cat, same story still. Up momentum, or even this would qualify right here. Bottom has not been broken. This is candle number 28. So if it breaks above these fractals, that's an entry with a stop loss below the opposite fractal, or the bottom in this case. Euro yen, same thing. Up momentum, bottom didn't get broken. I need a correction or continuation. Well, actually, at this moment, I can take off that pending order because at this point in time, we're looking at candle number 10. So I didn't get the break here within 5 to 6 candles. So that's actually the reason I had it there. So now I can delete it. So I take it away. I can actually add it again about 3 candles from now and add it above this fractal. As long as this bottom doesn't get broken. Let's see. We have, yeah, this is actually 3 out of 7. You're right. Because this is 1, this is 2. These are 2 good candles. And this is a 3rd good candle. But ultimately, even if we look at this part right here, these are 6 candles. Then we find here 1, here 2nd, and here 3rd. This is not the best momentum candle. It's bullish, but that's almost it, basically. It doesn't have a great close, but it's not a doji either, so. The other could be, account could be like this, and there's one inside candle, which is still tolerable. That does not look the best like momentum though visually. The bottom in that case could be used the candle or still the fractal. Ultimately though, this is for sure still momentum, but actually, let me get back. No, wait, sorry. No, this is one part. This is correction, and this is momentum. So no, this is not momentum actually, because we had too big of a pause right in here. So yeah, sometimes it's a bit grayish, let's say, whether this counts or not. I think it's okay to count. So the 12 candle rule basically states that you wanted the correction to last at least 12 candles. Once it has 12 candles, then a breakout is okay. So a breakout candle, the 13th candle that breaks through is okay. In this case, for instance, here we have momentum. Right here, momentum. And we see, for instance, let's see. This is the 11th candle. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 corrective candles, and the 11th pushes through. That's too soon. That is not a breakout below this bottom because it has to be 12 correction candles. We only had 10 before the 11th broke, and it has to be the 13th or higher that breaks. So that's not entry, and this kind of false break is therefore avoided. Here, for instance, here's a bottom, and the breakout occurs on the 21st candle here. So we had 20 corrective candles from here all the way to here. That's okay. Then that breakout qualifies. The breakout doesn't go anywhere, and the exit happens somewhere here because that's the failure of the breakout. So this turns out into a small loss. Eventually, the still goes to the downside, but that's a different matter. It's maybe not the optimal exit, but that's just those are the rules at least. So in this case, here momentum. This is candle number 16. That means we had 15 corrective candles before breaking this fractal, and that's good. So this is a valid breakout below this fractal. Stop loss above here, and that trade went fine, and the exit occurred right here. Unfortunately, a bit early, but still not bad. Probably about 2 to 1 or 1.5 to 1. Yeah, the 6th candle here was bearish, so I would exit on the 7th. Because it's bearish, I would give one more candle. The 7th doesn't push through the bottom, and therefore that's the exit on the 7th. Does that make sense, BT? So let me show you one thing though before I wrap up this webinar. Please take a look at this link before too many maybe exit as I dive into more specific questions perhaps. Take a look at this link. There's a UK Forex Awards, and Admiral Markets is nominated. So if you're happy about Admiral Markets, either as a broker or education perhaps, or technical analysis, or the customer service, or multiple of those, you can choose all categories, or anyone else for that matter, right? Any other category. Then yeah, would love to get your vote. So the link is in the chat. I just sent it to you, and you could basically choose your categories. So let's say you think that Admiral Markets is a good MT4 broker, then you can click on best MT4. You click on Admiral Markets, so you voted. If you think that we're good educators, you can do the same. You click on education, you click on Admiral Markets, you added another vote. Technical analysis, customer service. So you voted 4 times, let's say. And when you're happy with that, you can continue, click on continue. First name, last name. You don't have to fill in company name, position, email address. You do have to do. You don't have to fill this in either. It's just voluntary. Only the name, first and last name, and email. Click on submit, and you voted on these 4 things: best education, technical, on Admiral Markets. So any vote, of course, would be highly appreciated, and we would be very happy with that. Otherwise, from a webinar point of view, Nana is going to take a look at the trading stop EA tonight. Tomorrow, we're going to take a look at the trend and how to avoid missing the big run. Both of them at 4 p.m. GMT time. Don't forget to take a look at the heat map of Admiral Markets, analytics, heat map, wave analysis, technical analysis, fundamentals, all of it right there at your disposal. And also take a look at the Supreme Edition, right? Don't forget 56 additional features. All right, I don't see any questions, so I think probably can wrap it up unless maybe one last pair. Let's see anything. The Kiwi still push, right? I said that there's that chance that we'll push above this high at least. Unfortunately, it did more than that. It broke above this top. So it really pushed a lot. At this moment, I would say that, yeah, this is momentum, but we don't have, we don't have an entry necessarily at the moment just because we need a fractal first of all. So that's not yet there. And downside is not valid either. This was momentum, but we broke the top. So 4-hour chart is just in a waiting mode, basically. Kiwi has, from a moving average point of view, used the 21 band to get back to the 144. Could be a bouncing spot, but at this moment, has to build itself, has to wait. From a FIB point of view, Aussie was a good short, but from a time perspective, waiting for an upside fractal here for a potential break above it, or for a down fractal for a potential break below it, which still could be this one, but that's still far from now. Dollar CAD, this is momentum, which means a break below this bottom. The upside, bottom got broken here, so upside is not valid anymore. This bottom, actually. If this was momentum, yeah, I would say it qualifies barely. Then this bottom got broken. So upside momentum, there's no upside momentum anymore because this is just too much of a correction. If anything, there's a downside momentum here, but it would require a break of this fractal. So those are just some examples of a dollar CAD. New Zealand yen. Let's see. This is momentum. We got the break here. This could qualify as momentum, but the bottom got broken. That means the most recent momentum is this. And that qualifies, but we don't have a fractal. If this becomes a fractal, then this would be a momentum entry above it. Downside, no momentum at the moment because, let's see, first of all, this momentum got broken. The top, that doesn't qualify. Here we have momentum too, that got broken as well. Here we have momentum, but that entry was already here and has already occurred, so no downside. Same thing indeed. All right, so thanks for joining. I hope to see you in tonight's and tomorrow's webinar, and I wish you all good trading. Talk to you soon. Cheers.